Hey guys, what's up? We're gonna start with our backtesting session. In today's backtesting session, we're gonna keep doing the same what we were doing last time, which is doing the range analysis. And this is what I'm gonna keep doing every freaky. Frankly, until I get it deep and rooted in my head. And also, I'm gonna help you with this to you as well, because I'm pretty sure as more I could explain to you, the better I become, and the better I can explain to you later. So I'm gonna explain to you how the ranges work, how you're gonna keep analyzing them and determine the real direction of the market. So let's imagine that we're in a bullish trend like this. So you already know that there are some phases in the market. This is called like the distribution phase, or it could be called like impulse phase. And then the price enters in a certain consolidation phase. So it means like it's trapped between one low and one high, right? And then after this is with the pattern that we are keep looking. So if we're in a bullish trend, we will try to find something that is called a strong low, which means that is the lowest low that it will be likely respected. It means that the price won't take this low. It won't take it, right? It will respect this low. I mean, this one. I just draw here. The price would respect this one, because we're in a bullish trend. So it's likely, there's more likelihood that the price respect the lows than the highs, because again, we're in a bullish trend, right? So what is the pattern? We're gonna look for we're gonna spot certain liquidity or some order block areas or order block zones like this one, right? And of course I put it in blue because they are demand zone areas, right? Like this one. After this, the price can do the next movement, and this is what we're gonna try to look for. The price can do the next. It can take the liquidity of the lows and continue with the bullish impulse, right? And this is the pattern we're looking for. We're looking for this type of reaction. So the price, we will look for the price to took the liquidity of the lows that are here, like this one. Look, this one to this one, right? So all of this is liquidity. All that liquidity is being taken by this bearish impulse, and then it continues with the uptrend. Now what we have to do next is to look for update or strong low. Now the price would likely restrict this low while it keeps pushing up. So this is the theory, and how it works is where we're gonna keep actually doing once and over again to train our eyes. And this is in a bullish impulse, and now we're gonna see the impulse of in a bearish impulse, which is actually the same thing, but of course in a bearish example. So let me show you how it works. Well, doesn't matter the color. All right, so again, we are now imagine the next. We are in a bearish impulse, right? Like this. Boom, continue pushing down again. So this is the expansion phase, or the distribution phase, or the impulse phase, as you might want to call it. And then the price starts doing the next, which is the consolidation phase. So it's trapped between a high and between a low, right? Get trapped. Once you get trapped here, now we're gonna look for a pattern of continuation, because actually, in few words, looking for this pattern of the strong high or strong low, it's looking for a pattern of continuation, right? So we will spot the next. We will have, I'm gonna put here two zones. We will have here two supply areas, which I'm gonna mark in red. Here's another supply area, right? And now when the price is in this phase, what we're gonna do is that we're just gonna wait for for all the liquidity that is being accumulated. When I say liquidity, is money trapped. And when I say money trapped, is like there are plenty of traders putting orders right here. And if you want to learn more about the liquidity topic, I have a video in which I explain it in detail, theoretically, and also on the market, right? And as you can see, I'm also marking this, which is a very famous trend line, right? This is a trend line, so people would expect for the price to do the next. And this is what actually the price does, and I want you to be aware of the next. Let's put it in red. So the price do the next. It comes to this, you think it will continue with the downtrend, right? And boom, it breaks the trend line. And then from this point, you would at this point when it's here, so many people would say, okay, it's bullish impulse, continues with the downtrend. Have you ever been trapped in this way? Yeah, I put the liquidity taken here, but it also could be here. It doesn't matter. But again, take into consideration this. Okay, so these are the two examples. We're gonna keep looking for this. Also, as a pattern of confirmation. but we're not looking for patterns confirmation. We're just looking at, we're updating our strong highs and a strong low. Now the strong high would be this one, because this is the in a bearish example, the highs are the strong ones. It means that they are likely to be respected because all the lows are mitigated. Look, this low is mitigated, this low is mitigated, or not respected at all, right? And when the price enters in this type of phase, like the consolidation phase, so people start thinking that it would make a retracement. It does it, but not completely, and then continue with the downtrend. And now this high becomes our strong high, right? And we continue with the exercise. So all of this that I'm doing is just to make it clearer for you, and you know what we're gonna keep looking in the market. Definitely, this is an exercise entirely for myself, but I understand that most of the people that are under smart money concepts do not understand these concepts that clearly. And my objective with this channel is just help you clarifying those things that probably at a certain moment when I was learning was actually very difficult to understand. Okay, with that being said, let's continue. So I'm doing a back testing on a GBP USD, and I'm analyzing it, like during the day. So I'm gonna keep trying to explain all of these things, and sometimes I'm gonna keep just continue with the explanations. And I just have changed the color of the candles. I hope this doesn't make you uncomfortable, but at the end, you don't need to focus on the color, but you need to focus is actually what is the market doing. So that's why I just put it like as simple as that, right? So blue areas for demand areas, or blue rectangles for demand areas, and red rectangles for supply areas. That most of those are validated or they confluence with another block most of the times. Right, so now look, we're in a bearish impulse, as you can see. The prices continue pushing downwards, right? Now the price has entered on this imbalance, and it has continued with the uptrend, and we're gonna wait for the market shifts, which means the ending of the range right here. Let's see what happens. All right, so the market finishes this range with the bottom of the candle, and now we have to update our strong low. Now we're gonna keep looking for the same pattern of confirmation. So if you see, here is the explanation I just provided you. So look, this is the first. I'm just gonna mark it here with this trend line. Look, this is the expansion phase or the impulse phase, right? Once this pulse is being done, all of this becomes the consolidation phase. I'm gonna delete this for the sake of the explanation, right? So all of this is the consolidation. You see, the market moves like horizontally. Yeah, there are some spikes right here, but at the end, the price continues with the uptrend. So what you're gonna try to find is the same pattern of continuation in a bullish example. What was it? Did you recall it? If you don't, here it is. Look, we're gonna look for the price to take the liquidity of certain lows, and then the price enter to another block to continue with the uptrend. Now, once the price breaks this with a body of the candle, with a high, with a body of the candle, I didn't mention that, sorry, during the explanation, but when the price breaks this, the highest high, this one, with a body of the candle, we can determine the continuation of the impulse. A really, really big thing that they didn't mention. But anyway, now I mention it. And once the price breaks this with a body of the candle, well, now we can continue with an uptrend and we can update our strong low. And this is what we're going to keep doing here. So we already have the confirmation. Now we're going to look for this pattern, as I said to you before. And I'm just going to write them directly. And I'm going to try to, this is not a class per se, there's not too many, there's many people here, actually. I gotcha. Where is it? So this is the clearest order block for me. It could be in this part, right? But as you can see, it's being mitigated. When I say mitigated, it means that the price kind of respected it, but also there is it was not respected because it was broken with a body of a candle. So let's go a little bit down, and then you can see this beautiful spike. So this spike is our entry point, this one. And you say, what is this one? Well, once you see a spike, it means that in lower time frame is a retracement. So all of this could be on an order block in a yearly time frame, because we're in a daily time frame, right? All right, now once we got this, we're gonna see the pattern of liquidity. So liquidity has been taken right here, boom, liquidity, boom, taken. And after this, we have the first confirmation, which is a boss breakup structure. But then the highest high, which was this one, was broken with a bottom of the candle right here. Like this, with a bottom of the candle, and now the price continue with its uptrend. Now, this will become our strong low, right? It means that price is likely will respect likely this zone, and this will become like a key level, a resistance level, which the price will not will be. The price can take it, of course, like break it. But once it when the price did that, when the price does it, it would mean that we have a market shift or a change of direction, right? Now, this, as you can see, this is a decisional area where is also an order block, very clear right here. But however, as you can see, we can find here some liquidity trapped. There is liquidity, so money accumulated. Now, this order block can be validated if there is liquidity right here. Now let's see what happens. All right, look what happens. The price didn't provide any type of liquidity, but it just took this one that is here. And also the price reacted in this zone, very close, right? Yeah, another order. Now let's see what happens. So it entered it here in an order block, extreme of the movement. Let's see if the price respects this low. Well, it didn't respect it. So what is the meaning? What is the meaning of this? Now that we have a market shift or a change of direction, and this is where now we're gonna keep updating. So once a bullish trend is being broken or changed, now we have this, which is the market shift, and now we're gonna keep analyzing the same thing, but towards downwards. Let's say downwards because we're now in a bearish trend. Now, same story. We have a liquidity graph right here, liquidity graph. All of this is liquidity. Then we have a breakup structure with a body of the candle here. Boss breakup structure. And now we're gonna keep spotting some of these order blocks or demand, in this case supply areas, which the price would likely respect. If that's the case, and we're gonna just mark them as the sake of the exercise. So for example, this could be one. However, there's a lot of liquidity over this one. I don't like it at all. I'm gonna put this one here. Yeah, why do I take this one? Because all of this is liquidity trapped in the market. All of this, from this to this, so liquidity. All right, and now look, when the price make this breakout of structure, we can see two order blocks. This is the first one, and this is the second one. Guess what is the one I'm gonna take? They are right, this one, the one I'm just marking here. Why this one? Because this is liquidity. Now let's see if the price actually respects this. Definitely the price can enter here and continue. But let's see what happens, right? So kind of had a reaction, not a big one honestly, and then it took the liquidity that is here above this high. Let's keep analyzing, right? Should we? Bearish example, let's see. Okay, the price entering the order block, consolidating, which is fine, no problem. So far, let me check one thing. Once the price make this, yeah, which is a breakout with a body of the candle, this decisional here becomes very attractive to have a entry because this becomes a supply area. Now look, once the price made this breakout with a body of the candle, the supply area was mitigated. Now, would this be useful? I don't know. Let's see what happens. Yeah, it was useful. So once you enter here, the price continue pushing up, right? Next level to be mitigated, it could be this one. I'd rather prefer to see a movement right here, right? Here. But let's see what happens. Right, is reaction. Is this range broken? Not yet. So the price just took the liquidity with a small candle, not with the body of the candle. So let's see. Candle. Alright, it's having a reaction. Not so sure if this is gonna be respected. Let me see what happens. So slowly and steady is going down, right? Now what we're gonna do, we're just gonna wait for a while and we're gonna see. So let's analyze a little bit this part because here is a lot of liquidity trap. Now the question is, are we in a bullish trend or in a bearish trend? What do you think? Are we in a bullish trend or in a bearish trend? What would you say? Well, the answer is we are still in a bearish trend. Why is it? Because this is the bearish impulse. Even though the price has took all the liquidity that was with this impulse, it hasn't broken this high with the body of the candle. If the price breaks this high with the body of the candle, okay, we can say definitely we're in a, now we have a market shift, and with that we are able to continue with the pushing with upwards, right? But now let's analyze the next. After this breakage here with a break of body of the candle, we can see that the price has a lot of liquidity here. All of this is liquidity. All of this is liquidity. Even above of this area, there's a lot of liquidity. Let me check. Yeah. So all of this is liquidity trap accumulated, right? Now, if the price makes enough liquidity, maybe this order block. Look, this order block here. Let's pay attention to the next. So as you can see, we have here an accumulation of lows really important until this point. So there is a lot of lows here, which has been so I mean, look, this is another block, it was mitigated, then you have another block, it was mitigated, then you have another block, it was mitigated, another block mitigated. This was the one who wasn't mitigated, and now we have the same pattern. Another block mitigated, another block, and apparently will be mitigated. What do I think about this? So this order block which is not mitigated, I'm talking about the one here, this blue, it can be respected just if the price makes enough liquidity here, like here. When I say liquidity, it's like he traps a lot of people making certain fancy patterns, and then takes the liquidity and boom, continue with the uptrend, right? That would be one possibility. Another possibility, because we're still in a bearish trend, is that the price simply keep going down. Continue with the downtrend after the reaction, and then boom, continue with the down. Why is that a possibility? Because, well, because there is a lot of liquidity. So let's see what actually happens. If happens one of these possibilities that we are talking about or discussing. So liquidity has been made. Let's see. All right, nice reaction. So probably yes, it could be respected. All right, so the price didn't have to go that far. So here, it just respected this order, which is fine. It happens sometimes. This sort of which is here. Yeah, here we have. And if we have a breakage with above the candle, then we can confirm the continuation of a bullish trend. But it didn't. You see, it didn't do it. It just took it without candle wick, not strong enough, and it continued pushing down. Now let's see. Now we have our first order block, the one we said it will have a reaction. But let's see if it actually continues with the downtrend. I'm not so sure on this. It's having a reaction. No, right? So as I said, it made a lot of liquidity, right? Once the liquidity has been done, so it traps a lot of people thinking that this could be a really good point of entry. But since it didn't break with a bottom candle, that was enough information for us to continue with the bearish impulse, right? Now look how the continuation of the bearish impulse is. This is the impulse. It gets very close to the key level, even entering another block which was above of the previous one, because there was liquidity, and then boom, it continued with it down. Very beautiful example. Boom. You see? So this low was mitigated. Now once this low is mitigated, what we have to do again is just we need to mark we have to spot our closest strong high, because we're still in a very strength. But see, unfortunately we cannot find it like very clear. This is another block, but above this order block there is money accumulated. So somebody would say, hey, but there is always money accumulated above certain highs or above certain lows. So how do you determine when one works or when one doesn't? And I mean, first of all, you need to know a lot the pair you're executing. So for example, the GBP/USD is one of my favorites. So first you need to understand how that asset actually works. Once you understand it, so if the price actually respects or do not respect the liquidity, well, you start like figuring out, because each currency is different, right? You cannot treat all the assets as they are the same. Maybe your strategy may apply to all of them, but you need to do a judicious and responsible back test so you can actually determine if they work or not, right? At least in the GBP/USD, most of the order blocks are respected, but if they have prior liquidity to the order block or the entry point, once we got there, do we have reference points? Yes, we do. So look, the price reaction on this unmitigated order block. Here is another unmitigated order block right here, and I think there is another. There are plenty on non-mitigated order blocks. For example, here I'm pretty sure here should be this one. Yeah, it's been mitigated a little bit, I have to be honest. Look, with this candle of the body, with this candle wick, it entered and it had a certain reaction, but it wasn't that strong, and it entered properly to the fair value gap, which is the 50%. Now let's see if actually the price respects this or not, or drawings up. So we have three possible not mitigated order blocks that could be referenced as mitigation areas. Now let's keep it analyzed. All right, now look at the next. Do you see this? Now we have to, after the price entered to a liquidity area, we could find the next. We can see range ending if it makes it. So liquidity had been taken, and now we have here a break of the structure, not with a body the candle, not so clear. So we're gonna wait a little bit. Now it's done. So if you can see, here is evident order block, which is here. I don't know if the price actually would respect this, because we're still in a bearish. Let's see what actually happened. It's a demand zone. Yeah, I'm not so sure. Probably price may react on this candle wick and continue with the downtrend. Oh wait, it didn't. Fine, good. All right, so it's getting to our selling area or supply area. Okay, didn't enter to any part, but it has done the breakage with about of the. Now this becomes a risky area, to be honest, because of the next. Look, all of that is liquidity, including this thing. And here is a trend line, which most of them are actually liquidity areas. Now it may have a reaction. All right, it almost got a reaction here. Okay, now it entered. Now let's see what actually happens here. Okay, so all of this, let's ignore this because it has been already mitigated. Good. Nice. Okay. Yeah, let's keep continue with analysis. It's reacting here. It has done a break of structure. Well, not so far, not so clear. Now what I see is this liquidity here. There I see it. And well, it didn't enter, so it's still liquidity. Let's wait patiently and see what happens. So there are two possibilities. The price can continue with the downtrend because what we are actually now, or maybe can react maybe on this sort of block. We are not so sure. We need to have more liquidity prior this one so it can work. Let's see what actually happens. Yeah, it didn't work. Yeah, I said to you, it will continue with the downtrend. It doesn't matter. All right, now we got a really nice reaction here. So break of the structure. We haven't changed or we haven't done a continuation so far. Just the price took a little bit of the liquidity, but it's not a complete range. And now look where the price is reacting. The price reacted on this order block here. This is a continuation pattern. Why is this a continuation pattern? Because of the next. Here we got a boss breaker structure, boss, and before this post we got this order block, but there was liquidity prior to this one, and this one was the one who has not liquidity, right? But it wasn't respected at all because, as I said to you before, the price is still reacting on this boss, and after this it also made the next. It made this breakage here, and then it let this order block, this one, and this is where the price is actually reacting. It's fine, it's fine. The important thing of this exercise is that we understand what actually the price is doing. And the sake of this exercise is not finding confirmations or try to execute orders. No, because otherwise I would be doing this or that. But what I'm actually watching is just how the price is reacting and why it's reacting in certain ways. So I'm trying to understand why some movements are done. And after that, understanding of the movements, I can surely understand the direction of some of the movements of this currency does, right? Or this pair does. As simple as that. Now we can find here liquidity. Here it is, liquidity above this order block. Okay, now this order block, which is right here, looks kind of appealing for me because look, all this liquidity was being created in here, so it's a lot. Demand is why. Now let's see what happens, because so far we know that the price has reacted here, and I think it will take the liquidity of these highs and probably this also lows. But let's see what happens. All right, it took the liquidity of the highs as we said before. All right, so you see now this order block was kind of interesting for us. It actually got a reaction. So let's see if the price actually respects this one, or it respected this one. Let's see. It was not respected, but it reacted in this one, which was good. It happens, but we need to understand why it happens, right? All right. So after this breakage of this high, do we still have a strong low? Not yet. The strong low will appear when the market breaks the strong high with a body of the candle. So far, we don't move any finger here. So we are selling here. So let's see what happens. Where this price, where it could react. I'm actually watching, but I'm not so sure, to be honest. This is an imbalance, which was mitigated. Maybe this could be one. Okay, after the breakage of this high, we can find what. Maybe. So look, this is what I would like. Do you remember in today's exercise? Okay, look, do you remember this movement? This one. So the price made this slow and steady, higher high, sorry, lower high. Yeah, sorry. So lower high, lower low, lower high, and then when we took the liquidity, get to a certain level and continue with the downtrend. So probably we can see something similar. So again, something similar like a lower low, lower low, lower high, low high, low low, lower high. And then, for example, I can enter, for example, in this order block or another block which is right here, and boom, continue with the impulse, and then boom, continue going downwards. But let's see what actually happens, or we just continue with uptrend. Simple. Let's see. Right now, I can see the next to this liquid. Then it makes this breakup structure with a bottom of the candle, which is already great confirmation. Not that great because it did it with a body of it. We didn't do it with a body of the candle, and it's reacting to this order block. Order block that was I was spotted, but it wasn't so sure to be honest about this one. And then it continues reacting to this order block, and let's see if they makes the breakage with a body. Yeah, now it's clear. Now it's completed. So it was just a small trap. Perfect. Now, since we are in this point, we can keep selling from this order block here. Nice one. Also from this one. And also we can okay, but even though this is liquidity, it can confirm in a certain way one of these order blocks here, which from my point of view, this would be the order block that I think the price would respect the most if it does proper liquidity. Demand. Yeah, let's see. But this is something that actually happens sometimes. Okay, nice. It breaks with this high with the bottom of the candle. Boom. Oh no, yet. Yeah, now it's completely broken. All right, now what happens? Yeah, it had certain reaction. It went, it wasn't good. In here, it got a small reaction, which is with a candle, and continue with the uptrend. That happens. Now, where the price reacted, it reacted here, still on the order block. So it didn't invalidate it at all. Yeah, it still works as a strong low. It still works as a strong low. Don't like it that much, to be honest, but it still works. Alright, so liquidity is being here, taken, and then we have a boss. And now this becomes our extreme of movement creator. There. And all of this, which is here, is liquidity. Now let's see what happens. If it continues pushing up. Now we also need to be aware about this, where the price is reacting. Remember that these are just zones that the price can take. Would they be taking it now? Not so sure. But we're just gonna keep watching the price closely. Okay? Let's see. Enter to the zone, to the retracement area. Now you can see this is a lot of, this is a huge liquidity trap here. Look, there were many people buying here at this trend line. Tell me if you weren't one of those here. And now this low, this order block becomes attractive. Now the price can react even on this decisional or in this one, and this extreme, and continue with the bullish impulse so far, unless, as you already know, it breaks it with the body of the candle. Let's see. Okay, look, it did respect it, and it continued pushing up. Nice. We're not guessing the price, we're just analyzing what the price may do in certain areas. So, for example, in this case, I was completely wrong. It happens, and in this case, I was right. It's good. Remember that here is that if you have a 50% right, a 50% wrong chance, it's super good, because when you are right, you can win the double, the triple, 4 times, 5 times, 10 times more. And if you're mistaken, you just lose 1. If you use the risks properly, of course. If you're done, well, then you are just gambling, in other words. Now let's keep. Right, so it's doing a consolidation phase now. I don't even like. You see this trend line? Probably the price may react here and then took all the liquidity of this trend line. Good, it entered here, we're fine. Let's see if we see any type of retracement. We are seeing it. Now look at the next. The liquidity has been taken here of these highs. Now we have this boss break of structure. This is a high. Woohoo! Yeah, it also could come here. So possibilities are that the price can go here and enter here and then go down, or simply go down from this point. And since we don't know what the market will do, of course we have to risk. That's why we're in this profession, right? Possible entry points could be this one, this sort of look right here, but also this is a very interesting entry point to buy. Sorry, not supply, it should be demand. Why? Because all of this liquidity which is trapped here. Yeah, so let's see. It can go down, enter here, pushing up, and continue with the uptrend, or just enter here, continue with the downtrend. Let's see what actually happens. It gets towards selling zone. Right now it's not validated. It's fine. Good. All right. Now here is actually having a reaction. Let's see what happens here. And now, every time we have this breakage, and we are in a bullish trend, because I didn't mention this. So this was our strong high, right? Their strong low. Now this one was broken. This was the closest high, and since this movement, the price entered on this order block. Not this one, not the one we marked, because it was mitigated here, but this one here. Now, since this has all the confluences, which is liquidity taken, which took the liquidity of this low, and then the boss breakout structure. Now this becomes our strong high, new strong high, strong low. Sorry. This becomes our strong low. I forgot to keep on updating this as we keep progressing. Now same story. Now same story with this high here. Just okay. Once it's been broken, we have to analyze the same scenario, in which is we will find our strong low. Now, since we don't have any clear reaction on an order block, we do have a confirmation, but it's not that clear. So we keep maintaining this as an order block, or strong boss. Perfect. Now all of this is liquidity, which makes this a really more interesting entry point. Now it was our high, previous high. This high entered in this order block. Here, good entry, boss breakout structure, and it continued with the uptrend. Now would it be this or a strong low? I would like to accept it, but it will be our strong. This will become our strong low. And based on the confirmations, we just have to follow the trading plan. Simple as that, right? Perfect. And now with this strong low, we will keep analyzing, and we're gonna keep watching what the price, which I consider it will change the direction very soon, very soon. Yeah, there you go. All right, seems it would respect this order block, but I don't think so. Yet, that's it to you. It will respect it. Now this is reacting on our imbalance, right? This is reacting in our imbalance. This is the imbalance, or sorry, the imbalance, but and here's another decisional entry point, which is this one here. Yep, it respected this one much more because there was liquidity prior this decisional. So all of this money that I was watching in a certain moment, and I said to you before, I said it would change the direction, and now it's doing it. Now it's taking all this liquidity which is being accumulated. Now here is I consider this is a really good point to continue with the option, but we're just gonna keep watching. And also we need to see where are possible entry points in which the price we can sell. Here is another order block, selling order block here. Even though this one, yeah, that one is much. I like this entry area much. And it's being mitigated. Well, let's see what happens. Another interesting point would be this one, this sort of block here, which is actually very isolated. And here's another. It didn't want to react, to respect it, just continue with it downtrend. Awesome. Well, here's another. This is the This is the decision didn't took. So because of the money that once was there, it's now being mitigated, right? All that we were expecting to be taken in a certain moment, now with just a impressive movement is being taken by the. All right, gotcha. Now look at the next. Definitely, of course, we're in a very strange. That there is no doubt about it, right? Once this low has been broken, which was, or let's say, much more strong low, this one. The others were not as good one because there were a lot of liquidity. Now we can spot that this is very strange again. Now we are again in a bearish movement. So you see that once you start understanding the market, you see that the price of the market, the cycles, So in a certain moment it was bearish, then it continued being bullish, breaks this high, continued being bullish, and in a certain moment it reacts in a huge imbalance, and then it continued or in another block or supply area, and then it changes the direction completely. Now I'm watching the next. This is another decision. Now we continue with the downtrend, maybe. This one, continuation. I don't like the continuation pattern because of the next. This is liquidity accumulated, but we would need a lot of time, and also a confirmation in daily time frame to buy. That's it. All right, now we have the confirmation, which is the liquidity grab, and now we need a bust. Okay, new liquidity grab inside the order block. So no more. All right, now you just continue going down. So all the liquidity that was there once is being taken by the price. And you need to understand also that the bearish impulses are 10 times faster and 10 times stronger than the bullish impulses. Bullish impulses are sometimes they can seem strong, but no, bearish ones are the really good ones. So it was in 2014. All right, let's keep it in line. It entered in an order block, maybe this one, but they're not that clear. Right now, we would ask, oh, where is your strong high? Since it's being going, is this or still being our strong high? Well, guys, I would consider that it's true because there is not a really clear liquidity taken, a breakup structure, with the confirmations that we need. All of this is just order flow, The price entering an order block, continue. Entering an order block, continue. This is what actually the market has been doing during all this time. Now let's see what happens. All right, now it entered in our imbalance, in our order block, which was marked. Now let's see what actually happens after this. Do we have a breakage? So we would need a bust or a break of the structure with a body of the candle right here, but it's not that clear. Yeah, nothing we can trust, and that's the thing. We couldn't trust in this. So another entry point would be this one here. Now, but so far, I can see a very clear new range beginning. This one. This will be our update or strong low. Why? Because the price entered in this order block. Perfect. It took the liquidity of the high with this one, and then you make a bust break of structure here. So this could be considered a new strong high, right? And also look at the next. The price made a small confirmation here. Almost, I don't know, price enter here and continue with the movement. Reaction on the order block. All right. Here we have a range ending, which means the price has got to this place. Now liquidity has been here. Yeah, this was. No, I like much more this one. Perfect. And now we're gonna spot here a continuation pattern. Not continuation. This will be a reverse. Would this work? If the price enters on this order block, we will have to continue selling, but it will just react on an imbalance and continue with it. Let's see what happens. Okay, selling. Now it's invalidated for one reason. There is not plenty of liquidity to be taken, so yeah, that's why I told you it wasn't enough liquidity. Right, so now this will become our strong high. Why? Already we know that because it's been the liquidity taken and the pattern has been made as we were expecting it would be made. Now, this after the risk breakage, it was a reaction point. That's why the price reacting here. All right, I'm gonna mark this as a. Don't ask me why yet. Just ask and just marking it. And now here is the next imbalance or mitigation point. We have here a really low one here. Boom, 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 boom. The price almost get to the order block. Let's see if it makes a breakout of the structure with the body of the candle. Yeah, kind of. Yes, it did it. Right, we're almost an hour doing. How do I feel? I'm alone in this. It doesn't matter at all. To be a professional trader is just a, why do I do simply to have a record or like a track of what I've been doing. This isn't charged for me, but helping others if they can help themselves with my teaching today. Right now, the price got a reaction. Let's see if it actually respects this point. No, it didn't. It went directly to the extreme of movement creator. There's where it has certain reaction. Here. Yes. That's why it reacted. It goes away. Good. No problem. Above these highs, there is a lot of liquidity trap. You see here now. So, but let's say if the price actually respects this, we have to keep selling in this. All right. What would be a good decisional entry point? This one would be a great decisional entry area or entry point. Now, would it be the respect? Well, we have to. Well, it didn't get to this point. You just get to this decisional, which was another possibility, but okay, it's fine. It's fine, it's fine. Let's just continue with the uptrend. Now we have the trend line has been changed. Now we're in a bullish impulse, which is actually very good. Now we have to spot our order block, which will be this. And now we're gonna keep waiting. We need to see quite a lot of liquidity below this low so we can confirm this will be already entry point. Otherwise, it wouldn't. Yeah, so well, still reaction. Unless we have a confirmation inside this decisional, we will is reacting properly. Alright, and it was our entry point. Good, nice. Since the high has been changed here, now we're gonna make update of the strong low. Now this will become our low, and again this is the liquidity. Okay, fair enough. So guys, I think I'm gonna stop here because we have analyzed a lot today. I'm very pleased how much we have advanced today. We have analyzed an hour, which is equivalent to like I don't know how many years we started. When did we start today? Yesterday. I think we started right here. So we have analyzed the 2 years of the GBP USD on a daily. Now it's been cool. Some of the predictions were right, some of the predictions were wrong. But remember, the thing here is not how many you have correct, or if you have all of them correct. Extremely great, but it's not like that. Life is not like that. But at least you would take them as a very positive. I'm so sorry, guys. A little bit tired. Oh, but looking at the next, and the price is reacting on this decision. Very great. Point to rate. Let's see if it makes a break of the structure with whatever they can. Yeah, it's respecting this definitely because this is a strong low. So we would expect a certain reaction like that one. We're sent right now. It's making a lot of liquidity. We don't know if we would respect it, but we just get. As I said to you, it's slow, especially in bullish trend. In a bullish trend, and now look, it's reacting on this order. Now would the price respect this point? Not so sure. Also because the price did not make a break of a structure with a bearish candle to confirm the bearish trend or the continuation of the bearish trend. So again, we still bullish. Not respected at all. It respected low. Yeah, now it reacted in this point, and it did not now it has done the break of the structure, which is fine. That's what we were expecting to do. Oh yeah, here with the boss, with this body of the candle. Now we understand why it will, and it will keep continuing going down. Here Right. No. I said it will stop, but I just started analyzing. I couldn't stop. Right now we're in a better strength. This low was being taken with a bottom of the candle with all this breakage, and now we have a complete bearish strength again. So with the pass of the year, the GBP/USD has been bearish a lot. We do understand that there are, of course, a lot of geopolitics involved in it. But anyway, let's see. What keep happening? Okay, it reacted on this imbalance we have here. Yeah, nice reaction. It was a really good entry point, to buy. But now it continues with the downtrend. All right, we're gonna stop. All right, guys. So thank you so much for coming or being today or watching these videos. I'm really appreciate the time you're spending with me. I'm going to do this just to become a better trader. And with the passage of the time, when I finish my backtesting session and my liquidity session and all my backtesting, I'm pretty sure I will update my results and all what I want to achieve in my. So thank you so much for being in today's backtesting.